Thinking of moving your properties into a limited company, or worried about the massive capital gains tax and stamp duty bill? Well, what if I told you there's a legal way to avoid both, but it only works if you know the rules. In this video, I'm going to break down how landlords are using a combination of Section 162 Incorporation Relief and partnership rules to restructure their portfolio without being hit with tens of thousands of tax up front. I'll also show you what makes a genuine property business, why HMRC won't let just anyone do this, and how to avoid the common pitfalls that could cost you everything. If you're into smart property moves, do me a favour, hit that subscribe button. Now let's get into it. Why even transfer properties into a company? Let's start with why landlords even want to do this. Since Section 24 was introduced, landlords can no longer fully deduct mortgage interest as a cost if they hold properties in their own name. That's hammered high-rate taxpayers. A limited company structure lets you pay corporation tax at 19 or 25% instead of 40% plus personal tax, deduct 100% of your mortgage interest as a business expense, retain profits in the company to reinvest, ideal for portfolio growth, and plan smarter for inheritance tax using tools like family investment companies. So the appeal is obvious, but the two big blockers, capital gains tax and stamp duty when transferring. The problem, capital gains tax and stamp duty land tax on transfers. Let's say you bought a property years ago for $150,000. It's now worth $300,000. If you transfer that into a limited company, you're technically selling it to your own company. HMRC sees that as a gain of $150K and wants their cut. If you're a higher rate taxpayer, you're looking at 28% capital gains tax. That's 42 grand, just like that. On top of that, your company has to pay stamp duty, including the 3% additional property surcharge on the full market value. That could easily be another 10 to 15k, even more if you've got multiple properties. So how are landlords doing this without triggering either? Section 162 Incorporation Relief. This is where Section 162 comes in. It's part of the Taxation of Chargeable Gains Act 1992, and it allows you to defer capital gains tax if you transfer a business into a limited company in exchange for shares. Let's break that down. You transfer the property business, not just assets, the whole thing. The company gives you shares in return. The gain is rolled over into the value of those shares. You don't pay capital gains tax now, you only pay it later when you sell those shares. So you're deferring the tax, not dodging it, but it frees up cash flow to keep growing your portfolio without the big upfront hit. Do you qualify as a business? Here's the tricky part. Section 162 only applies to businesses, not passive investments. HMRC has no hard line on what qualifies, but in general, 5+ properties tends to help. You're actively involved in managing tenants, repairs and viewings. You can demonstrate it takes 20+ hours per week of your time. You treat it like a trade, not a side hustle. There was a case, Ramsey versus HMRC, where the landlord had 8 properties, spent a lot of time in them and won the case. It was deemed a business, but just owning 2 rentals and using an agent, you're unlikely to qualify. This is where a good tax advisor can make or break your strategy. Solving the stamp duty problem. So okay, Section 162 handles capital gains tax, but what about stamp duty? This is where Partnership Incorporation Relief comes in. If you've been operating as a genuine property partnership, you can potentially avoid stamp duty land tax when transferring the partnership into a limited company. How? Well, under FA 2003, a transfer from a partnership to a company controlled by the same partners can be exempt from SDLT because you haven't really changed economic control. What's a genuine partnership? This isn't just owning property with your spouse. HMRC wants to see the partnership existed before the incorporation. That means a written partnership agreement, filing SA 800 partnership tax returns, having a joint bank account and managing property income and expenses together, public or contractual evidence that you've been trading as a partnership, not just jointly owning. The longer you've run your portfolio as a partnership, the stronger your case. But be warned, HMRC has challenged people who create fake partnerships just to get around SDLT. How this works in practice. Let's say you and your partner have 10 properties, all managed by yourselves. You filed a partnership return for 3 years and operate a joint bank account. Portfolio is worth 1.5 million with 500k in gains. You transfer the entire business into a limited company that you both own. And that means no capital gains tax due now, thanks to Section 162, no stamp duty because of the partnership exemption. The company inherits the properties and the debt. You get shares in the company instead. It can now grow under a more tax efficient structure. Try doing this without the reliefs and you'd owe 140k plus in tax. Risks and common pitfalls. Of course, it's not all smooth sailing. If you don't truly qualify as a business or partnership, HMRC can challenge you and backdate the tax. You also need to think about financing. Not all lenders will allow corporate ownership or transfers. There's the risk of double tax if you later want to take money out of the company as dividends or salary. And once you're incorporated, there's no going back. Reversing it could cost even more, so it's essential to get professional help. This is not one for a quick Google and DIY form. You should always get advice from a professional. So there you have it. If you're a serious landlord looking to scale or pass assets on efficiently, this strategy could be a total game changer. But the key word here is strategy. Don't just jump into this because someone in a Facebook group said it worked for them. Get proper advice, build your business properly, and do it the right way. If you want more in-depth videos on UK property, do me a favour, hit that like and subscribe button. Catch you on the next one.